Think for a moment about that $10,000 sitting in your bank account right now. In this year of 2026, that money is not just sitting there, it is slowly being eroded by an invisible thief that we all know as inflation. You see the prices at the grocery store, and you feel the sting at the gas pump every single week. Many of us were told that Social Security would be our ultimate safety net when the time came to stop working. But as we look at the headlines today, we know that the safety net is fraying at the edges. The reality is that relying on a government check is no longer a plan for a comfortable life. It is a plan for survival. And you deserve more than just surviving after 40 years of hard work. There is a fundamental difference between how the average person thinks about money and how the truly wealthy protect their legacy. The wealthy do not work for money. They own assets that work for them while they sleep. They own the land, they own the buildings, and they own the infrastructure that keeps the world moving. Today, I am going to show you exactly how to take that $10,000 and turn it into your own private pension fund. I am going to reveal a legal structure that was once reserved for elite families like the Vanderbilts, but is now available to you for the price of a single share. We are going to look at 3 specific assets that can provide a growing stream of income every single month. By the time we are finished, you will have a clear mathematical roadmap to turn a modest investment into a significant monthly paycheck. Before we dive into the history and the strategy, I want to ask you for a small favor. If you find value in these honest conversations about building real wealth and protecting your future, please hit the like button and subscribe to the channel. Your support allows us to continue providing this clarity to more people who are searching for a better way to retire. Also, please leave a comment below and let me know what your biggest concern is regarding your retirement in today's economy. Now, let us go back in time to the year 1960 to understand how this all started. A small group of investors realized that ordinary people were being locked out of the most lucrative real estate deals in the country. If you wanted to own a shopping center or a massive warehouse, you needed millions of dollars and powerful connections. President Dwight Eisenhower saw this inequality and signed the Real Estate Investment Trust Act into law. This act created what we now call REITs, or Real Estate Investment Trusts. The goal was simple: to allow anyone to buy shares in a large-scale, income-producing real estate portfolio. But there was a catch that made these companies special. By law, these trusts must pay out at least 90% of their taxable income directly to their shareholders. In exchange for doing this, the companies do not have to pay corporate income tax. This means more money stays in the pockets of people like you and me, instead of going to the government. Think of it as being a landlord without ever having to pick up a hammer or deal with a broken pipe. You own the property, you collect the rent, and a professional management team handles all the headaches. One of the most powerful versions of this is something called a Triple-Net Lease. In a normal rental agreement, the landlord has to pay for taxes, insurance, and maintenance. But in a Triple-Net Lease, the tenant agrees to pay for all of those expenses themselves. The tenant pays the rent, the tenant pays the property taxes, and the tenant pays to fix the roof. The company you invest in simply collects the profit and passes it on to you. This creates a level of stability and predictability that is almost unheard of in other types of investments. Now, let us look at the first pillar of our $10,000 retirement plan. This company is known as Realty Income Corporation, and their ticker symbol is the letter O. They are so confident in their business model that they have trademarked the phrase, the monthly dividend company. While most stocks pay you every 3 months, Realty Income pays you every single month, just like a clock. They have made over 650 consecutive monthly payments since they started. But more importantly for us, they have increased that dividend over 120 times. Think about what that means for someone in their 60s or 70s. While the cost of milk and eggs goes up, your monthly check from Realty Income is also going up to help you keep pace. But who is actually paying that rent? Realty Income owns over 15,000 properties leased to businesses that we use every day. They lease to grocery stores like Kroger, convenience stores like 7-Eleven, and pharmacies like Walgreens. These are businesses that people visit regardless of what the stock market is doing. Even in a recession, people still need their medicine and their groceries. This makes your income stream incredibly resilient against economic downturns. Now, let us move to the second pillar of our strategy, a company called Prologis, with the ticker symbol PLD. If Realty Income is your bedrock of stability, Prologis is your engine for growth. Prologis is the largest owner of logistics and warehouse space in the entire world. We live in a world where everyone wants their packages delivered to their door within 24 hours. Every time your neighbor orders something online, that product likely spent time in a Prologis warehouse. They own over 1 billion square feet of space near major ports and highways across 19 countries. The land in these locations is extremely limited, which gives Prologis immense power to raise rents every year. They are the backbone of global commerce. And as long as people keep buying things, Prologis will keep collecting rent. For a retiree, this represents a massive opportunity to benefit from the rise of e-commerce without having to start a business yourself. Their dividend growth has been much faster than the average stock, which helps build your wealth exponentially over time. Finally, we come to the third pillar, which is Digital Realty Trust, ticker symbol DLR. This is where we connect your retirement to the future of technology and artificial intelligence. Digital Realty owns massive data centers that house the servers for the world's largest companies. When you use an AI tool, when you stream a movie, or when a bank processes a transaction, it happens inside a data center. These are not just buildings. They are the brain of the digital economy. Technology companies sign leases for 10 or 20 years because moving their equipment is almost impossible. This gives you a tenant that is highly unlikely to ever leave. As we see the explosion of artificial intelligence in 2026, the demand for this space is at an all-time high. By owning Digital Realty, you're making sure that a portion of the world's technological progress ends up in your bank account. So how do we actually put this together with your $10,000? If you were to split that money equally between these three companies, you would be creating a diversified stream of income. One part of your money is protected by grocery stores and pharmacies. One part is fueled by the movement of goods and global shipping. And the last part is powered by the digital revolution and data storage. In the first year, you might only see a few $100s in dividends. I know that might not sound life-changing at first glance, but this is where the magic of the human mind meets the power of mathematics. If you choose to use something called a dividend reinvestment plan, or DRIP, your wealth begins to snowball. Every dividend check you receive is used to buy more shares, which then produce even more dividends. Over 10 or 20 years, that $10,000 seed can grow into a forest of income. We have seen historical models where this type of disciplined investing turns a modest sum into hundreds of thousands of dollars. It is being the most patient person in the room. Wall Street wants you to be afraid of every market dip so that you sell your shares and pay them fees. They want you to chase the latest shiny object or the newest speculative coin. But the wealthy families we talked about earlier do not do that. They buy quality assets, they hold them through the storms, and they let time do the heavy lifting. This strategy requires a shift in your mindset. You have to stop looking at the daily price of your shares and start looking at the monthly income they produce. If the price of the stock goes down, but the grocery store is still paying its rent, you are still winning. In fact, when prices go down, your reinvested dividends buy even more shares at a discount. This is how you turn a market crisis into a personal opportunity. If you are starting later in life, do not let that discourage you. Even if you only have 10 years until you need the money, the growth can still be significant. And if you can add even a small amount, like $100 a month, to this plan, the results will accelerate even faster. The goal is to reach a point where your dividends cover your basic expenses. Once your housing, your utilities, and your food are paid for by your assets, you are truly free. You no longer have to work because you need a paycheck. You work because you choose to. Or you spend your time with your grandchildren and traveling the world. That is the definition of real wealth. It is not about having a mountain of cash. It is about having a river of income that never runs dry. Before we conclude, I want to remind you that the most important step is the first one. Knowledge without action is just a hobby. Open your brokerage account today and make your first trade, even if it is just for one share. Break the cycle of waiting for the perfect moment, because the perfect moment was 20 years ago. The second best moment is right now. I hope this roadmap has given you the confidence to take control of your financial future. If you found this information helpful, please share this video with a friend who might be worried about their retirement. And don't forget to hit that like button and subscribe for more deep dives into the world of smart investing. I want to hear from you. So please leave a comment with the word bedrock if you are committed to building your foundation today. It helps me know who is truly serious about their journey. Thank you for spending this time with me. Take care of yourself and stay focused on the long term. Your future self will thank you for the decisions you make today. I will see you in the next conversation.